Hello, Mia DeBolt here, bringing you more transparency in trading. Thank you so much for joining me on this journey to the seven-figure funded mark. So today is day 11 of the FTMO challenge and day 8 of the funded trader. So today I actually took 3 trades, and spoiler alert, it was a down day. However, I'm really excited to actually share the trades with you because there's a lot of lessons to be learned. If we want to grow as traders, we have to actually look at our lessons and learn something from them so that we don't make those same mistakes over and over again. So I do have some lessons that I want to share with you in these trades, and I think you'll get a lot out of it. So if you haven't subscribed yet, make sure that you're following this journey down below, because I share all of my trades, no matter if they're wins or they're losses, because there's lessons to be learned in both of them. And in fact, I think there's more lessons to be learned when we actually take losing trades. And it comes with the territory, right? So without further ado, I want to share with you what I took in the morning session, because it was a win and a loss. Okay, so what do I mean by that? Well, I actually have 2 accounts and I traded them the same, but because of spreads, there was actually a difference, a massive difference. So I wanted to share that with you. Okay, so what I did differently today was that ICT actually starts his day off by analyzing the dollar index. Now, it's something that's a little bit foreign to me. I never really pay attention to the dollar index. I used to when I was trading GU and EU and all the other Forex pairs. However, I just have ignored it since I started with the S&P. So it's something that I was looking at today, and I was kind of looking at it in a way that there's support here, but it's a really big area where there's stops and there's liquidity down here. So I was looking at that and thinking, okay, so there's a possibility that the dollar could drop into maybe a fair value gap and drop into a discount. So I was kind of 50-50 when the equity open came. And so I was looking at the retracement, and today's price action was not pretty at all. And so I'm going to fast forward this and just kind of share what my thoughts were. Like, a lot of manipulation yesterday, and this is the range that we're pretty much rebalancing and coming down into a discount. So that's where I was thinking, okay, we have this daily bullish order block, this old high, and it's 50% of the swing here. So I was looking at that as a very sensitive area. It's also the top of that daily open gap. And so unfortunately, because I was so eager and I was feeling really good today, I was not as sad as I've been in the past for the past week. And so I actually dove in, and I probably was a little bit impatient. So that's a lesson that I continue to learn. Okay, so price is pushing down. There's a 15-minute fair value gap. That's what the purple is. And so I have that marked up. It dipped into that and reacted from the low of that fair value gap. And so I was looking at that as enough sell side to be taken, and there's going to be buy side. So remember, my bias today was that the DXY was going to drop, and so that would push the indices up. All right, so here's where I am measuring the last swing. So the market structure shift, I had that as my point of interest. There was a 5-minute fair value gap here that was bold that should act as support. And so that's really where I kind of was just thinking it was going to go bullish from here. So the equity opened, it dipped down, took sell side, and then pushed up and created that kind of fair value gap. And then there's a 1-minute fair value gap down here that I didn't want closed. I wanted that to be a breakaway gap. And so I'm just going to kind of play this from the place where I started my trade. So I believe it's here, and I'm going to speed this up to 2 times as fast. I'm just going to go through this because we do have 3 trades to actually go through. Okay, so there's volume imbalances. That's kind of what I'm marking up here, and I want that to be acting as support, but I do actually want this to come down to that market structure shift, to this 5-minute fair value gap. And originally I did have my entry down here at the 5-minute fair value gap. However, I moved it up to this fair value gap, and I have my point of interest here. And this is where you can see that I enter. So it's very uncomfortable for me, I have to say, to buy as price is going down, but I did it, and I did it on both of these. And I am glad that I actually entered this because it just helped me to kind of continue to get over my fears of entering when the price is actually very optimal. So I was entering that. The 5-minute fair value gap didn't really hold. However, when this closes, I do believe that structure is beneficial. So here's the thing about this price action. It was very choppy. It's not one-sided. It was very choppy for a while. I think it retraced for about 25 minutes. So I'm going to continue fast forwarding this so that we can just really get through this. It was going down to the sell side. I kind of paused the video, I think, and now you can see that my stop is kind of in jeopardy. I'm not a huge fan of 8-cap just because their spreads are so unfavorable, and you'll see that it actually is the very same trade. My entry is pretty much the same. However, I have a hugely different outcome. Okay, so again, I'm going to fast forward because this does oscillate back and forth, and it does end up going up, and structure is, you know, this 5-minute fair value gap does provide support. It colors outside the lines, as ICT would say. And so it does go up. I have a little bit of profit going, and I don't take any partials. So that's one thing that, you know, in retrospect, it was not clean price action, and I definitely should have been paying the trader today. So that's one thing that I didn't do throughout the day, and you'll see that theme that I should have paid the trader, and I'll point that out. Okay, so again, this is, you know, kind of going towards my stop. This kind of salmon line is the New York equity open, so it is something that's sensitive, as well as this green line, which is the New York open. And so it does oscillate back and forth, continues to kind of eke its way up, and then it goes down for the sell side. So you can see here that my stop was taken from 8-cap, and so I lost 1.04%, and my FTMO kept me in. So, you know, I did end up, you know, riding this back up, and it was just collecting orders, taking sell side, taking buy side, and it just was not beautiful at all. So I'm just going to fast forward this because I did have a potential to make over 1% on my FTMO. I waited for this, and I was expecting the buy side to be taken. So there's a lesson to be learned here as far as price action and reading the price. So because I was just looking at taking a partial, I was going to take off 25% here and take off 25% here and 25%, and then this was my terminus target. This is actually where I was not really reading price action. I was in the trade. I was more emotional about the money. I just have to say, it's annoying that 8-cap keeps stopping me out before the trade actually goes. So the spreads really are not beneficial, and something that I might do differently is just make my stop loss a little bit bigger for 8-cap as opposed to FTMO. So that's kind of something that I'm looking to transition and change about my trading. Okay, so this again just takes that buy side liquidity. These are too even, and there's a lot of equals right there, a lot of buy stops. And so I do close out 25%. So I had that ready to go, but just look at this price action. It just completely collapses. And so this is that indication, like it starts going down and going down with a lot of fervor. So I do move my stop up, and that is about 50% of that order block there. So that's something that I did correctly, and that I am really happy that I did, because it does end up taking my stop. But this is just price action that should have told me to close it and collapse the trade, because it was not necessarily going to go back up. So it left that fair value gap. It didn't even go back up and close it out, and it just started displacing to the downside. So that's again some more warning signs that I was on the wrong side, and that's okay because I did close out and pay the trader here. So I got 0.41%, and I am also at or above break even here. So that last partial is at a place where if it does break that, then I ended up with a positive trade. So it does end up doing that. And look at these 1 minute candles. These 1 minute candles are super strong to the downside. And so again, that's a lesson for me to learn, that if I'm feeling like it's just not going to go back up and it's not going to respect these order blocks, then I definitely need to close it out. So that was a lesson to be learned, but I did close out with 0.56 for the morning. So I had 4.23 in the morning, and I ended up just not taking any more trades. So there's 20 minutes of kind of fluff here. And so I'm just going to move to the next video and we'll look at what I did for the PM session, because I didn't trade anymore for the AM session, and the PM session was something that I wanted to look at and see if there's opportunity. Okay, so this is the PM session. So the PM session happens after the New York lunch, which is typically around 9 to 10 o'clock my time. So I was looking at the algorithm starting to reverse and expecting it to go for buy side, since it had already gone down to sell side. It had already filled that 15-minute fair value gap. It bounced off of that 15-minute consequent encroachment, which was the remaining 15%. So it went down to 50% of that 15-minute fair value gap. And so that was what I was expecting it to reverse. And I was taking that 5-minute fair value gap down here as a breakaway gap. So I was expecting buy side to start being taken. And another lesson learned, right? Because if I look at the overall higher time frame structure, we're still in a huge bearish flag. So there's a lot of bearishness that still can happen. It was very choppy, and there's also some points of interest that I will point out later. So there's an old low here, and this old low is an equal low, and this is where sell side was residing in my previous trade. So the PM trade also was something that I was offsides, and you'll see very quickly that it's something that, you know, I probably shouldn't have been trading at all, because it was very two-sided. Like, it could have gone up and it also could have gone down. So whenever there's a 50-50 chance, it's likely that I'm gambling. So you'll see that in my trading as well, because if I'm changing my bias halfway into the session, it's likely that I don't actually know which direction it's going, and I'm just going off of the indications that I'm getting, and it's likely not to be a profitable day for me. So those are things that are warning signs for me. And I just want to share with you kind of what happened in this PM session, because I was down 1.04 for the funded trader. So I went down to 0.5% risk. So that was a good thing. I was just risking 0.5%. And for FTMO, I actually made a mistake, because my one-click trader was actually set to 2%. So when I halved that, thinking that I was only risking 0.5%, I actually risked 1%. So that was another kind of indication that maybe I was a little mentally tired from the morning, and I should have just closed shop and, you know, walked away with my profits. Okay, so let's just play this. And again, I'm going to play this as 2 times the speed so that we can get through this, and I can just share with you the lessons that I gleaned from these losing trades. Okay, so I entered this and it's about 10:03, which is 3 minutes past that lunch hour, and buy side has already been taken. And so let's just see what happens here. So again, I thought I was only risking 0.5% because I didn't want to lose more than what I had gained in the morning session. However, I quickly realized that I was actually in this for 1%, because just all the little fluctuations should be a lot less as far as loss and profit. So that's something that I didn't pay attention to, the 2% here that had been saved on one-click trade. And so just double checking, triple checking that before I actually enter my trade. All right, so I entered that and I'm expecting buy side to be taken. There is buy side up here, there's buy side right here, and there's 5-minute fair value gaps. However, this looks a lot like a bearish flag. So I'm thinking, oh, well, it's just tricking, you know, the retailers into thinking it's a bearish flag. However, it was a bearish flag. Okay, so let's continue this, and I'm just going to fast forward this. It does go down. There's a market structure shift. It took buy side and it reacted from the mean threshold of that bearish order block. Okay, so it does push up there is some profit to be had I recognized that this old low was significant. So this old low was that sell side liquidity that was targeted in my previous trade, which is another reason that I should have just walked away in the morning. So I am setting my alerts. This is something that kind of oscillates back and forth. And again, this is just not a very high quality trade because I wasn't really necessarily looking at the higher time frame, and the DXY was also not behaving the way that I was expecting. So this doesn't, create that displacement up. It's not reaching up for the buy side liquidity up here with a lot of fair value gaps or anything like that. It's collapsing on itself every time it makes a fair value gap. So all of these are indications that I'm probably off sides. Okay, so it's accumulating, it's showing weakness. It's not, those caffeinated bars that I love and that show that price is continuing up. So this is really showing weakness. It's just creating this really nasty price action for me. And it's not respecting any kind of volume imbalances or anything like that. So it's really something that I should have probably collapsed right here and just let it go and walked away. But it does give me hope. And unfortunately, that little bit of hope just kept me in the game. So I kept it on, and eventually I trimmed my risk a little bit. So I do trim that risk to that order block, and that does end up saving some of my equity. So it goes up, it doesn't break that structure again, and it ends up displacing to the downside. Okay, so I'm really not feeling this trade. I feel like it's going to turn on me at any moment. So I do trim my risk to the consequent encroachment of the daily open gap, and there you go. I actually lose that trade, lose what I got in the morning because I did over risk a little bit too much. And so I'm at negative 0.1 for the day for FTMO and negative 1.39 for the funded trader. Okay, so it does end up going down. And so I do switch my bias, and here we go. So we have a 5-minute fair value gap, and here's where, again, I move my position down. Instead of waiting, I am impatient, and quite frankly, I think my mindset is more about recouping my losses than really trading effectively. So I do see this 5-minute breaker and I ignore it. So this is my go-to setup, is the 5-minute breaker. And so that's something that, again, when I ignore my go-to setup, that's another indication I just need to close the charts and walk away. Okay, so I'm measuring the last swing. I'm expecting it to go back up to this 5-minute fair value gap. And this is where I do start to think about entering. So I'm waiting for that 15-minute candle to close. And I do believe that we're coming up to that 15-minute closing and then also the top of the hour. So I'm going to fast forward this to where I actually enter. Okay, so it's pushed down again, and quite frankly, I moved my position down, and that's just bad news, right? Like, it's already not worked for me in one trade, so I needed to be a little bit more patient and actually go with setups that I know are going to pan out for me. So like that 5-minute bearish breaker that I pointed out, that was something that is my go-to setup. So again, this is another lesson learned. So it's just oscillating. I'm looking for that volume imbalance to create some resistance and for it to just start running for the sell side. And so it's that time of day, 10:48, that it should start running. It's giving me some hope, and it's starting to run down, but it doesn't actually take the short-term low yet. So it just respects that. And all of these fair value gaps, all of the 1-minute fair value gaps start getting closed in. So it's not creating that displacement. And this is something that I learned from TT Trades, which he's an amazing educator as well. And he actually shares a really great video. I have the link down below in the description, and he shares what displacement is. So, in terms of ICT and what you can expect with displacement, this is not the displacement that I'm looking for. I'm looking for fair value gaps that stay open, that elongated candles that just continue to run. So this is not the type of price action that I want to be in. Okay, so let's keep going. And it does run, but it doesn't take any kind of short-term lows yet, and it just starts retracing. So it gives me a little bit of hope here and there. And then let's just see how this turns out. So not beautiful price action, starts to push up. It's close to the 11 o'clock hour, so it is retracing back up. The 1 hour, I'm looking for that to be elongated and to close below that daily open gap and below that other candle. So that's kind of where I'm looking at this and thinking, okay, that is actually looking pretty good. And so I stay in it. And already this is just testing my patience. It's broken structure here. It's come down again. So it's just really nasty looking price action. And quite frankly, I should have been taking partials or closed my trade altogether because it was not necessarily a great trading day already. And, this is what happens. So it ends up coming back, and remember that 5-minute breaker. This is the 5-minute breaker. And so it does end up playing with that 5-minute breaker. Had I measured that displacement leg, that would have been in the premium, and I was selling in a discount. So again, another lesson to be learned. Okay, so it does continue to oscillate back and forth, and then it retracts. So it retracts, there's a volume imbalance, and it creates some support, and then it just starts running up. So 11:10, we're already up here at that volume imbalance, and that does not create any kind of resistance. In fact, it creates some support. So I'm just going to fast forward this because I think you already know what the outcome came out to be. And so here's the thing, I did reduce my risk down because I would have been stopped out at the full amount. And quite frankly, I should have just closed it there because there's equal highs there and it's starting to, move up. So I just didn't. I chose to stick with the trade and expecting maybe the consequent encroachment of that wick to be that I needed for it to continue going, but it didn't. So it created that 5-minute fair value gap and then ends up taking out my stops. So at the end of my day for FTMO, I actually lost 0.57 and I lost 1.87 on my funded trader. And I have a max loss for myself for my trade plan of 2%. So I was within my trade plan. It's totally okay to have a down day because I was just getting back on the horse. And in fact, I really enjoyed the lessons in diving into these trades because now I know that I just need to kind of get my feet back under me and maybe do it on demo next time. So that was another lesson that I could have done differently. And it's something that, quite frankly, when we take a big break or we have the emotional something that happens in our lives, then it's really a good time to actually demo trade and just get the feel of the market again. So I think some of the themes of my trade day were that I need to be patient for the premium and the discount. So if I'm going to buy, I need to buy in the discount area. If I'm going to sell, I need to wait for the premium area. And so just measuring those out, I need to actually be really patient and be okay if the trades go without me. So I think I had a little bit of FOMO and eagerness to get back into the market today. And so just to be completely honest, it was not a great trading day, but I felt amazing and I felt really focused. But, as you can see, it just because I felt amazing and felt focused, it wasn't necessarily a profitable day, but I mitigated my risk and I feel like I'm still profitable in both of my accounts. So at the end of the day, I have a balance of 3.09 on the FTMO and I still have 0.34 on the funded trader. So those are two really good numbers. I can work with those. I still have plenty of time in my challenges to actually make my profit goals. And so it's not something to freak out about at all. It's something to learn from and to move forward and do something differently. So I just want to share with you just where my accounts are. FTMO, I'm still at 3% in profit, and so you can see that here. And so these are the trades that I took. I'm still profitable in my expectancy and my win rate, and I had a down day, and that's okay. If I take high quality trades tomorrow, in retrospect, it just wasn't a really great trading day in general, and I am looking for bullishness, but that bullishness can't be forced. So with the funded trader, I'm almost back to zero, but that's okay. I still have a little bit of profit to play play with, and I'll just be ultra careful about what kind of setups. So any kind of bullishness, I will be looking for premier setups, and I will be sharing those with you. So that's my trades for today, some losses. And then just to go over the charts really quickly, what I mean about premium and discount is that I was buying in a premium up here. So this is the last swing, and this is my trade. So I was buying, this is the original position that I wanted to buy off of the 5-minute fair value gap, and there was a 1.6% potential had I closed all of the trade at that buy side liquidity. So again, this was just a little sweep for the buy stops just to trade them for sell stops. So it was something that in the higher time frame we're just in a big flag. So this is something that I don't typically like to actually trade. Okay, so that was my AM trade. Okay, so this is the PM trade. So there's a 4-hour breaker that I was looking at on the higher time frame, and it does typically end up supporting price when price is bullish. So I was looking at this run up to continue up for the buy side, and we had already passed the 4-hour wick, and so 50% of the 4-hour wick. So I was expecting the PM session just to be continuation, but we did not have that. So here's the thing about the sell side, the old sell side here. That was the point where I should have just looked at that. That was equal lows here, and that was the point of interest for the PM session. So it did push up. There's 3 drives here, and then it pushed down, and that was where I should have just stuck in with that breaker, my go-to setup, and had that as my trade. So instead, I actually sold in a discount and was expecting this daily open gap here to hold price down. However, it didn't. It went back up to this bearish breaker and then pushed down. So I just was on the wrong side of the market, and it was only because I was not patient today. So that seems to be a theme for me. So I'm going to be working on that. It's something that I'm really grateful for this YouTube channel. Thank you so much for tuning in, because just having to be accountable on YouTube for these trades really helps me to slow down and think, okay, so I can't revenge trade because I'm going to have to reveal that. And also, this is, something that I want to have other people learn from my lessons. And, if you learn something from this video that you can take into your trading and prevent you from having any losses, then I've done my job. So this is the trade that was the optimal trade for the PM session. So there's the consequent encroachment, the 50% of the daily open gap. There was the bearish breaker right there. So this bearish breaker, I like the 5-minute bearish breakers, and then that would be the entry. So that old low was a great place to put my stop, and so that would have been a nice little trade. However, just look at how much time it actually spent to get there. So it's like an hour. My patience is a little bit better now that I'm not super sad and dealing with my sick pup. So, it's a little bit better, but not super great. So 1 hour would have been decent. I think I endured an hour in this trade anyway. So from the moment that I actually entered to the moment that I got stopped out, it was 35 minutes. So it was half as long, but when it comes to ideal setups and when they start moving away from your entry point with conviction, that always feels good. And it does mean that you're on side, and it does mean that you're likely to get the profits that you're looking for. So that's where being a little bit more patient, I'm definitely going to work on that. Okay, so I hope that you learned something from this video, and if you did, drop a comment and tell me what you learned from this video, and I'd love to hear it. So if you want more videos like this, make sure that you subscribe below so that you can follow me along this journey to the 7-figure mark. So I really look forward to sharing more videos and more trades like this and more lessons. So I will see you in the next video and in the next trade. See you soon. Bye.